Hi everyone, my name is Rashid. Today is the 8th of April 2023 and I'm going to be giving my weekly prediction for SPY. And for the past weeks I've been giving predictions of SPX, but as I recorded and launched a new project last week, I can only predict SPY, and I will predict SPY from now on because I want to show real returns and losses that would be made based on the predictions that I make. Before I was just giving predictions and verifying them. Now I will do the same with the added task of actually showing the P&L that will be gained or lost based off of my predictions. And because of this, it's not possible to predict SPX as it cannot be traded in stock. So I'll be predicting SPY, which is an ETF of SPX. But before moving ahead with the video, it's important to make this disclaimer that all information in this video is completely for educational purposes, and it is highly inadvisable to take a trade based solely off of this information, since markets are subject to risk and taking positions uninformed could result in hefty losses, and it is advised to consult a financial advisor before doing so. Now that we've gotten the disclaimer out of the way, we'll continue with the monthly, weekly, and daily charts, and then I will go through my final prediction with you at the end with some levels to look out for. So, from the monthly charts, all we can really see is that the market is in a hefty consolidation for the last more than 6, 7, 8 months. So, the price range we're looking at is between 375 and 418, which, to be fair, is a very, very large range. But it has been trading within this range for extremely long. There was a breakout, but then it turned out to be a whipsaw. But as you can see, the market has been, even if you look closely, there's an even closer range of 410 and 378 within this consolidation for the last 5 months. And this is all that we can gain from the monthly charts. And as you can see, the month of April is currently a doji, but it hasn't closed yet, so we can't make predictions on it yet. We can see that this is a hammer pattern for the month of March, which is a very, very bullish candle, meaning that there's a possible breakout event that could happen in April, and the likelihood is that it might go upward. So this has bullish implications for the month of April. And now let's move to the weekly charts. Here's where things get a lot more interesting. As you can see, we had the 3 white soldiers pattern, which is a very, very strong bullish reversal pattern. And I predicted this last week, and as you can see, it has been closed up. But the week after this pattern, which is the week that I predicted last week, closed on a doji candle. Now, this means that it closed above the close of the previous candle, so yes, technically my prediction was correct. But taking it into account for this week, it could signal a reversal again. As you can see, we have been in this consolidation for the last 8 months. And as you can see, there has been very few breakouts. And most of them have happened to be whipsaws in the end anyways. So here we have a 3 white soldiers pattern, and now we have a doji candle in the weekly chart. So this means that there is a significant lack of movement or power, buying power, selling power in the market, which has caused this doji candle with a long upper and lower wick. And the implication for this is we can get our no trade zone from the weekly chart, since the way to trade dojis is to wait for the market to close above the high or the low of the doji. Now, if the market does close above the high of the doji, it would mean a continuation of the trend, which is upwards for the moment, which would result in no problem altogether. But if the market does end up closing below the doji, this would mean that the market has been in a reversal, and then steps will be taken accordingly. Another thing to consider is that, as you can see, the only way to trade this candle is to wait for a close. And if any trade is taken prematurely, this could result in hefty losses. Since we also have the FOMC meeting minutes this week, this could mean that any information that comes out of that could also result in market change, however, not as much as interest rate decisions. So, just to mention, it is important to wait for the close, and it's not advised to take aggressive trades as of the moment. Finally, if we head to the daily charts, we can see that this trading range that has been applied, obviously, since last week had Good Friday, there was only 4 days of trading. And it opened high, went low, and then closed up, which has resulted in the doji that we can see in the weekly charts. And since the price is approximately right in the middle, it is very important that we wait for it to close above or below before taking a position. Also, we can see that the daily chart shows a very clear bullish engulfing pattern, which has a very, very strong bullish implication for the week. And as I mentioned while discussing the weekly chart, if the market does end up closing above the doji, then obviously, yeah, the trend continues. But another thing to look out for is the Bollinger Bands. Since if the market does continue upwards and the band does not expand, then in this case, we might have a problem on our hands. But for the moment, based off of pure candlestick analysis, the bullish engulfing pattern is a very, very strong bullish pattern. So we can see from the monthly charts, we had a hammer, which is a bullish implication. We had the weekly charts, which showed a doji, which currently is indecision. And we have a bullish engulfing pattern to end the week, which means that there's a strong possibility that the market goes upwards. But due to the nature of the weekly charts as candlestick pattern, it is important to wait for the close, and I cannot stress this enough. As you can see from the Bollinger Band, the upper band is steadily moving upwards, but this lower band has started to reverse upwards, which means that in due time, it is a possibility that this upper band also reverses downwards and constricts. In this case, it is important that the market and price action does not break above the high of the Bollinger Band, as then it means that there's a high possibility for mean reversion, which would cause an immediate rally downwards. Now that we've covered technical analysis, the one last thing to look before we head to the Excel is this channel that I've drawn here. As you can see, the price action as for now is a clear upwards channel, and if we take into consideration channel rules, you can see it's gone here, rebounded down, come here, and then in the last week rebounded down again. So it's important that we wait at least for a shortfall or some event to happen in the channel before we can take a trade based off of this as well. And if the market does end up breaking this resistance zone, it is important to take into consideration that it could imply that it breaks the channel as well. In this case, that would not exactly have a bullish implication, because then it would effectively be breaking the Bollinger Band as well and most likely reverse back to the mean. And next, let's move over here. Now, this is a project that I launched last week, and I'll be going over what the actual process is for taking the trades and when, and I'll fill in the sheet accordingly. And as you can see, last week there was no trade based off of my prediction, so I didn't cover it in this video. However, if this week's prediction results in a trade, then I will cover it in next week's video and go over it in the review. So, the actual prediction for the week is to not take a trade yet. Wait for the trading range breakout. Buy when it crosses the high of the doji at 411.92. Sell when it falls below the doji low, 405.88, with a target of 1% and a trailing stop loss. If the target or stop loss is not hit, then we take the close price on Friday and whatever profit or loss we gain from that. The max open interest for the monthly expiry is 410 for the CE, with an open interest of 57,689 and a 385 for the PE at 188,036, with a monthly put to call ratio at 3.25. A max OI for the weekly expiry is 420 CE for the open interest of 32,396 and 390 PE for 28,153 open interest, and the weekly PCR is 2.55. As you can see from the option chain, we can also gain a weekly support and resistance of 420 and 390. Although it's very, very large of a range, it's still a support and resistance to look out for after the doji gets broken, which is where the market is holding most of its sellers. The weekly chart shows doji candle, which I've covered while doing the charts, and the daily chart shows a bullish engulfing pattern, which I've also covered. It's important to wait for the price to break the high low of the doji. As for the price action, there's an upward channel, which I've just covered. For the weekly trend, it's upward for the moment because of the three white soldier candles, but there's a possible reversal since we have a doji on our hands, and the monthly trend is sideways, which I've shown as a consolidation. So on this note, I would like to conclude the video, and in the next video, I'll be going over this prediction, any trades that got triggered based off of this prediction, and giving my new prediction for SPY next week, and I'll see you in the next video.